morning. You're watching The Market right here on 80 now with me, Aisha Faridi, Nikunj Dalmia, Avan Dubash, and it's the Holy Cheer, the Festival of Colors. Hopefully, we only see green led by both of you on the screen today.
I really hope so, Aisha. For the first time, the mood point is looking stable. I won't say the mood point is upbeat right now. A variety of factors perhaps are at play. The same factors which were working against us, they are looking stable. Globally, there seems to be a relief that the interest rate hike may be nearing its end. It's going to be 25, not 50. There is a big investor, a marquee name, who's checked in Adani group of stocks. That means that the domino effect what Adani group of stocks had on the market, what impact it had on the lender, at least for the moment, that's been taken care of. And in general, the market has found support from some key technical levels where some would argue and say that now in the near term, there could be a case for markets to give you a uptick rather than a downtick. I'm not making a claim or I'm not anywhere suggesting that the worst is behind us and you would snap out of the range. But the trade, I guess, for this week, even though it's a truncated week, one would say that you got to walk into trade this morning with little bit of optimism, a bit of glimmer of hope, and assumption that some technical strength is at play given what we saw on Thursday and Friday.
Right. Okay, let's just quickly recap what the week gone by was looking like. And remember, this is a truncated one with tomorrow the markets being off for the Festival of Holi. But we've closed a choppy week, finally in the green. The Adani Group stocks actually led the recovery last week. And the Nifty PE, though, largely remains unchanged at 18.1 times. The outperformers in the week gone by, besides the rebound in the Adani Group names, was Realty, PSUs, and the underperformance in IT and healthcare that came to the fore after them having doing pretty good year to date at least. They took a bit of a backseat. But Aman, what about the global indicators?
Well, we did have a positive week for the major averages, as you had the Dow adding about 1.5%, the S&P as well advanced, and ditto for the Nasdaq. And this, remember, on the back of the fact that we've also had that bond yield, which was about that 4% mark for various points last week. So remember, that was clearly on the minds of the investors. This morning as well, what we were watching out for, we're looking at the Powell's commentary, the jobs data as well, and the Asian screen as we speak. It's a little bit mixed. Modest growth targets been reflected from China, and as things stand, it's Shanghai as well as the Shanghai markets which are in the red, but the rest of Asia and Australia in the green. Ditto for the SGX Nifty. Well, it's the Adani group of stocks that have been in the limelight all of last week, given the fact that we've seen a very commendable recovery, Nikunj, from those 52-week lows. Now it looks like it has been a decisive move on the upside for Adani.
No, I mean, with the Adani group of stocks, it's all about Rajiv Jain and his view. And that is, I think, the start of the story, and that is the end of the story. That a big investor has checked in. We've discussed that, what's the rationale.
We heard from your interview as well as to, what was the rationale behind picking up and backing Adani Group names.
What's interesting for me is that what I've tracked Rajiv Jain, and he's been on the channel several times in different avatars. He's a very value conscious guy, and unlike a lot of foreign institutional investors who always bought into only IT and banks and consumer stocks in India, his large holdings are SBI, Power Grid, NTPC, ITC. So he typically likes to buy distress.
Yeah.
The fact that a large investor is betting on the infrastructure sector, because if you're betting on SBI, Power Grid and NTPC, it clearly means that you're betting on the infrastructure sector. So is Rajiv Jain indirectly saying that, folks, for next couple of years, IT is okay, banks are decent, but the real money for a long-term investor would be made where there is value and where there is functionality in terms of visibility. I think it's infrastructure. For me, that also is an important takeaway. What we've still not been able to figure out is that why did he buy from the promoters? Why did he not pick up the LIC stake?
Yeah.
Why did he not buy from the
open market?
Yeah. Given that there are compulsions which are at play for most of the global investors, ESG and others, how his funds now, or how his investors will react to this Adani purchase.
Yeah, in fact, let's hear it from the horse's mouth himself, the man of the moment. It's the Mega 80 Now exclusive, and Nikunj caught up with the man of the moment just over the weekend, whose 15,000 crore rupee investment in the Adani Group cheered the markets. Rajiv Jain explains his rationale behind his big bet.
This short sale report came out, which obviously was very strongly worded, in my opinion. Although as we started peeling the onion, we thought that this was kind of, old rehashed story. And from our perspective, the substance was not as meaningful here. But that sort of triggered this leg, which took it down. And I think the other part is that the technicalities of the index players involved, so and so, kind of made it worse.
Right. The fact that Adani group of stocks by traditional yardstick are expensive and that debt levels are high. As a fund manager, as an investor, what gives you the conviction that both the concerns which historically have been big concerns for Adani group of stocks, those concerns, according to you in your playbook, is something which is manageable?
See, if you look at vast majority of the assets are regulated assets. They tend to a very, very long tail. So when you have, you can't have financial leverage along with operating leverage. These companies have very sort of predictable long-term trajectory, even if you slow down the growth. So that's the first part of it. And when you adjust for the leverage, in fact, if you look at the U.S. utilities, and we own a bunch of them, on an average debt to EBITDA levels in U.S. utilities, and these are some of the best of the breed, is around 6 to 7 times debt to EBITDA. If you look at the leverage here, it's around 3.5 times. But the growth capex is why the negative free cash flow kicks in. So I think they have predictable earnings stream that has 20+ year visibility. These are regulated assets, and in growth utilities they tend to have negative free cash flow. That's the norm. That's, in fact, you want to have them. You want to have them have negative free cash flow. That means because they're able to deploy capital on a longer term basis with fairly attractive returns. So the debt levels, when you look from a utility perspective, is actually on the lower side, not on the higher side. But if they lower the capex plans, which they already announced, I think it becomes a fairly attractive sort of risk reward.
Every investment which you do comes with an underlying risk. So for Adani group of companies, how would you define your risk? What could go wrong, which you currently are aware of, but that is something which you're factoring in? What is the risk according to you?
Well, I think as you said, there's always some risk in that. I think the risk would be if the growth slows down dramatically in some of the companies that we own, because the regulatory issues that they might face on a go-forward basis. Because in regulated businesses, the biggest risk always is regulation, right? That's the positive, but that's a negative. So we don't see any signs of that yet. One of our concerns was, in terms of sort of managing growth, because these are complex projects. I think that, by the way, is sometimes not well appreciated, is that the barriers to entry in infrastructure anywhere in the world are very high, particularly in India. Execution extremely difficult. I mean, you might remember that POSCO Iron and Steel tried to acquire land for 7-8 years, couldn't even acquire land, and then they left. So greenfield projects are very, very difficult. And that's what I actually quite like it about this group, is they have shown remarkable ability to execute on greenfield projects. And I feel that they don't get full credit for that in terms of ability to pull that off.
Okay, let's connect with the technical experts and understand what is the market setup, which way is it time to remain constructive about Thursdays and Fridays price action. Kunal, Holi hai. You wearing suit and tie?
Yeah, Nigunj. I thought, let me be a bit different than
Yes. No wonder.
Contra.
Nuresh अगर suit and tie पहनेगा वो different होगा. Okay, guys, what is the market setup like, Nuresh? I'll be different. I'll start with Nuresh today.
So the market setup is pretty positive given that global markets have also bounced back. And the bounce in the last two sessions in Indian equities was across the board. So it was not just Nifty going up due to one or two stocks, but a bounce across mid-cap, small-cap indices. And we've made a good pace around 17,300. The initial target price was 17,600, which was easily crossed. And the next one now comes to 17,900 to 18,000 zones. And that is where we should slowly progress towards over the next few sessions. Same is the case with Bank Nifty, expecting a move slowly and steadily towards 42,000. So time for some bounce back in a lot of stocks which have corrected and made a base. Overall, very positive stock specific.
Right. Kunal, choppiness continues to hold. But having said that, we're now in that 17,600 to 800 kind of band. What next?
See, frankly, I'll not have too much of expectations on the positive side for the markets. I'm not saying that I'm extremely bearish, but then on the other hand, this market is very, very volatile and extremely sideways. Now we've seen, different textures of the markets moving sideways, correcting, sharply for a couple of trading sessions, then bouncing back, which means the markets have still not settled into a trading range. Now, the Friday's data indicates that there was a sharp reduction of open interest on the Nifty futures, which means that the element of short covering has happened into the Nifty futures. Now, Bank Nifty, there was an addition of OI, which means that there is more confidence on the Bank Nifty from short-term traders, and that could probably play a bit of a spoil sport. My sense is that possibly the indices open with a say 300-400 point gap up on the Bank Nifty, or maybe 100 odd points on the Nifty, 120 odd points. Then I think it's a good time to try and take some chips off the table, book out some profits, and then wait out for a further phase of correction to try and deploy the money back again.
All right, let's get those individual stock strategies going as well. Find out what the strategy is from our charters this Monday morning as the index is hovering around the 17,600 mark. And Naresh, what are your top bets?
So going with two stocks which are more of a bounce back candidates, which have corrected quite a lot from the top. So first is a buy on United Spirits, which has come back all the way down to 750 levels, which is where the whole rally started for the stock. In the last few sessions, it's almost made a double bottom around that 735 to 740 mark and is now making a reversal. Friday's candle was a strong one with a decent uptick in volumes. Expecting a minimum bounce back towards 800, which is the recent high. And if that crosses, that could be a big reversal in play for the stock. A stop loss at 740. Second is a buy on Tata Power, which has gone through a period of almost 1.5 to 2 years of consolidation. The stock has made a very strong base around 195 to 200 levels. So there are over 7 to 8 bottoms in that area for the last 1.5 years. And now trying to make a breakout move. The recent swing highs are around 210 to 212. If it can sustain above that, that would be a good breakout. Preempting that move, a stop loss at 204 and an initial target price of 230.
Right, okay, Kunal, what's your stock bet this morning?
Well, I'll go with few mid-cap names. Policy Bazaar is one stock which I've been bullish on. Stock, I think, hit a fresh multi-month high 600 approximately on Friday. So would continue to back the move for Policy Bazaar. Targets of 660. Stop loss could be trailed to 565. And the second is a complete contra buy on Cipla. Now the stock has fallen very sharply in the last 5-6 days. There has been a lot of news flow for the stock price. But I think at 875 odd levels, it's a very attractive zone to go for a contra buy on Cipla. So would suggest a buy 904 as an immediate target. Stop loss at 860.
Right, okay. Those are some stock ideas coming your way. But trading strategies, let's now get you some fundamental long-term ideas. Here's Ajay Srivastava from Dimensions Corporate. He's pretty bullish on the power sector and shares his view on consumer stocks like Varun Beverages.
Power is a sector we are quite bullish on. Generally speaking, it's had a bad year at this point of time, but come summers, come this year, the Government Electricity Act, if it sees the light of the day, is going to be a great boon for power companies. No competition. If pass-through cost comes through, they're going to reap a huge amount of benefit to it. So power as a sector, we're quite bullish on. So if you take a good company like, say, Varun Beverage, I'm not saying recommend it. It's not a reasonable P. It's a high P stock. It may still show growth, still give you income, but it's a high-risk venture. You saw what happened with liquor companies. They had the best quarter, but the stocks did not perform, or poor management. So just because industry is good, you had so many weddings, so many hotels opening up, the liquor stocks did not perform. They were poor managed companies. So, divorce yourself to the fact that economy can be very good, markets can be very good, but never underestimate bad management. India is full of bad management companies at this point of time who are not rewarding their shareholders, given what's happened to the economy last year. So I would still say on the side of this, that listen, do not try to invest your money too much, go spend it. But having said that, power, I said only one thing. Pass-through pricing is the key to fortunes of power companies. If the government has the gumption before election year to keep on going on that path of allowing Electricity Act pass-through pricing, it's a great boon. It may happen this year, may happen post-elections, but eventually people will have to pay for power, and you have a monopoly situation. You can't get new companies to come in. 3 companies control almost 80% of power in this country, supply in this country. You can't go wrong in that. You may go wrong on timing, but you can't go wrong on fundamentals.
Welcome back. Still tuned into the market. Let's focus in then on all the news bits. And the government has revised the windfall taxes on crude oil production, ATF and diesel exports. This is coming in for the 16th time. Petrol exports remain out of the ambit, but let's understand what the implications are of this. My colleague Prakash Priyadarshi joins in with the details. Prakash?
Yes, government has reviewed, windfall gain taxes on domestic crude production, ATF export and diesel export, and that is primarily based on the fluctuation in the global market in last 15 days. And as per the notification that has been issued by the Ministry of Finance, windfall gain taxes on domestic crude production has been increased to rupees 4,400 per ton from existing 4,350 rupees per ton. So there is slight increase in windfall gain taxes on crude production, which means government still believes that domestic oil producing companies like ONGC and OIL are still making profit. But when it comes to windfall gain taxes on ATF export, there is a relief for the companies, as government has decided to remove windfall gain taxes on ATF export from existing 1 rupees 50 paise per liter. But when it comes to diesel export, there is again a relief for the companies, as government has decided to reduce windfall gain taxes on diesel export 2 rupees 50 paise per liter from existing rupees to 2 rupees 50 paise per liter. So it's a relief for the companies, and mind you, petroleum is still out of the ambit of windfall gain taxes, and this revision has been made based on 2 important factors. The first one is with regard to some stability in the currency market, stability in fluctuation in rupee, and the one and another important factor is the stability in prices as far as crude oil is concerned, along with the retail prices. So based on these 2 factors, government has decided to reduce windfall gain tax on ATF and diesel export. And yes, there is a relief as far as these 2 products are concerned. Now, what will be the government decision? That will be based on the based on the fluctuation in the global market as far as crude oil prices are concerned. Let's wait and watch.
Okay, we'll wait and watch on that one. Prakash, thanks much for those details. But Mahanagar Gas is about to acquire Ashoka Buildcon's gas arm, Unigine Enviro, for a price consideration of 531 crore rupees. Now, this acquisition is going to help MGL to further expand their presence in its strongholds. Let me take it across to Somit and break it down further. Somit?
Well, this is the first ever acquisition of Mahanagar Gas, and they will be acquiring Unison and Vero for around 531 crore rupees, and this deal is expected to get completed by the end of the next financial year, that is 31st March 2024. Now, Unison is a city gas distributor company, and it has presence in 3 geographical areas. One is in Ratnagiri, the second one is Latur and Osmanabad, and these 2 are in the state of Maharashtra, while the third one is Chitradurga and Davangere, which is in the state of Karnataka. Now, when it comes to a city gas distribution area, its marketing and infrastructure exclusivity is of most important. And for the Ratnagiri area, if you see, the marketing exclusivity has ended in the calendar year 2022, but for the other 2 areas, the marketing exclusivity is expected to end in 2021, now 2027, which means that the company will be the only and the sole gas provider in these 2 areas till 2027. Now, in the infrastructure exclusivity in Ratnagiri and the other 2 areas ends in the calendar year 2041 and 2043. Now, if you see the financials of Unison, its revenue growth has been very good. From 7 crore in FY20, it has increased to around 89 crore. But do remember, it's still a loss-making company, and it has a gross debt of close to 113 crore rupees on its book. Now, what are the positives that is coming out of this acquisition for Mahanagar Gas? Firstly, Mahanagar Gas is a gross debt-free company and has a cash of more than 1800 crore rupees, which means that acquiring this company would not put any pressure on its book. And this transaction is very important for the company because for Mahanagar Gas, they have not won any new geographical area in the past many city gas auctions, and the biggest concern for Mahanagar Gas was its growth options going forward, and this acquisition puts a rest to these concerns. Now, analysts are also saying that this is of strategic importance to Mahanagar Gas, and this would help the company extend its footprint and would provide new avenues for long-term growth going ahead. Now, these the 3 geographical areas that the company is getting is present across its current geographical areas, so the capital expenditure, the incremental capital expenditure required by Mahanagar Gas would also be limited. And given the fact that the transaction has happened at a high P, it is anyways reflective of the high growth potential that is expected from Unison. Now, on the negative side, as I was mentioning, the acquisition has happened at a high P of around 20 times compared to Mahanagar Gas valuation of around 12 times, and given the fact that it's a loss-making company, the deal would not be EPS accretive at least in the near term. But when it comes from long-term perspective, the analyst community continues to remain bullish on Mahanagar Gas. And lastly, Ashoka Buildcon will also benefit from this acquisition because it owns around 51% stake in Unison, and it will be getting close to 271 crore rupees of this deal as against its equity investment of only 71 crore rupees.
All right, thanks very much. We'll be certainly watching out for those stocks in trade today, but let's move right on then and hear it out from the man of the moment, the person who put that 15,000 crore rupee investment in the Adani Group stocks. That's Rajiv Jain of GQG Capital. He believes that India is well positioned to see stellar growth, but we must be cautious about the global equity markets. Listen in.
Global equity markets, I feel one has to be a little bit more cautious because interest rates have not fully, they've gone up quite a bit. But if inflation doesn't come down in a meaningful manner, then there's a possibility interest rates can still surprise on the upside. In fact, if you look at the consensus expectations on US interest rates, they have moved since February, by the way, almost 65, 70 base point in terms of where interest rates could end up by end of this year. So I think there's still some risk. The other part is whether the geopolitical risk on a higher side. So I think we have to incorporate that, which, by the way, is another reason I actually like India because it has less geopolitical risk. So the risk factors are a lot more favorable in India than most of the other places. If you look at the constant barrage of news coming out of Washington, D.C. against China in terms of sanction against companies, products, and so on and so forth, that is not a recipe for re-rating for China per se. So in general, I believe that the market return expectations should be on the lower side, not a higher side, because there's been a whole generation of investors who have basically seen nothing but low or declining rates, and that I think that movie is pretty much over.
In general, the view on India is that Indian economy is in a fine fettle, and we are very proud that we are one of the fastest growing economy in the world. Stability, I think, is something which is obvious both in terms of the corporate predictability and the political stability, something you refer to. But my question is that everybody has also raised concerns about valuations in India. The reverse of what I asked you. It's like saying that in India, the market is great, but you're buying gold at the price of diamond.
Yeah, look, I think valuation is always an approximation, first of all. So, but I think part of the India's issue is the index composition, and I'm not saying in a bad way, but just a fact. So, if you look at, for example, state-owned banks in India, well, they're selling similar values to state-owned banks in China. Look at energy companies in India, same in China. Tech companies, very similar in China. But the index composition in China is a lot more cyclical versus index composition in India, right? So if you look at pharma companies in China, they're actually a little bit more expensive. Some of the best staples in China are similar valuations in India. So I think when you adjust for that, the valuation gap is not really much different.
Okay, that's the word coming in from Rajiv Jain, and you can catch that entire conversation at 9:20 and 10:30 a.m. today. But let's get you some more fundamental ideas. Real estate, because of the rally, if inflation were to ease, that's the expectation coming in from Neeraj Diwan of Quantum Securities, which is why he's betting big on DLF.
If you look at DLF, the kind of sales that they're able to do, the recent project which came a lot in the news where they sold 1,100 odd apartments in just 2-3 days. And they were each priced at 7.5 crores around. So there is on the ground, as far as the luxury or the higher end apartments are concerned, there is no slowdown as of now. I think there is some slowdown which is there in the low category one or maybe sub 50 lakhs one. But see, demand-wise, there's no issue as of now. But I think as far as interest rate sensors are concerned, which of course real estate is an interest rate sensitive sector, I think one needs to wait maybe some more time, maybe get another inflation data, because we saw a last inflation data also, which was a dampener to what people are expecting as far as the interest rate movement is concerned. So I think let's see one more data. I think if you see some respite happening there, then I think real estate is due for a rally from these levels, because most of the stocks have corrected and still they are 10, 15%, 20% below the high that they saw just a few months back. So I think it's due for a rally, but the real rally will come in only once you get some data point as far as inflation is concerned, if there's some easing happening there.
All right, let's bring on board Sandeep Sabharwal, who's joining in on the show. Hi there, Sandeep. Good morning. I'm sure you're pretty pleased because we've got a truncated trading week. And of course, there's also the Nifty, which is quoting around the 17,600 mark. We're mighty pleased because we got that mega ET Now exclusive with the man of the moment, if I may, Rajiv Jain, who picked up stake in the Adani Group stocks. And it was interesting in that interview with Nikunj because he spoke on a plethora of topics, but something that he said with respect to the Adani Group companies was that he expects a strong earnings visibility down the line. What's been your assessment or anything that stood out according to you in the interview?
I actually didn't look at the interview except for some experts which are coming just before we started talking. So difficult to comment, but I think the key is that, as I said the other day, that investment coming into the Adani Group from a credible foreign investor gives stability to the group as well as the overall market. Now, I still don't invest, so I haven't invested in Adani Group companies, and I'm unlikely to because of the nature of the business, and there are still some uncertainties around. So, but I think for the overall market sentiment, it's positive.
Let's change gears and talk about lenders. We'll talk about a Morgan Stanley report where they're talking about State Bank of India should outperform. But Sandeep, is there a tactical trade in PSU banks now? Not because of Adani, but in general, after the recent underperformance and what's happened to their underlying bent of underlying valuations, do you think next 3 to 6 months banks could regain their mojo which they've lost this year?
Yeah, banks will come back, but I would think that instead of playing more on PSU banks, which could possibly, like you said, tactical, cyclical bet could rally a bit more. But I think many of the larger private sector banks have also consolidated for a long time. So I think they also present good opportunities, stocks like ICICI, Axis, or even if you want to take a higher risk, instead of taking it on a PSU bank, you could take it on a bank like IndusInd Bank, etc. So these banks are much better placed given their overall CASA profile and the growth of deposits. For example, if you look at data which is put out by the RBI, the deposit growth of PSU banks is much lesser than the deposit growth of large private sector banks, and especially on the low cost CASA deposit side. So, directionally, long term, the fundamentals of the large private sector banks is improving much more than even the larger PSU banks, ex of SBI, where SBI took a big hit due to the entire Adani saga. It could see a bounce back.
Okay. Naresh, if banks come back, IT goes back. Will that trade continue, or right now banks and IT can go together?
I think both can go together. And say, in terms of IT, we've seen a decent enough downtick in the large caps at least. So we've seen a correction in Infosys as such, a little bit in TCS. But the mid cap and the small cap IT still have a lot to go. But the only case right now happening for IT is every stock in the sector is making different moves. So you have stocks which are struggling at the lower end of the range. So for example, Wipro is still 3% higher than the recent lows, 3 to 5% higher. But then you have a persistent systems which is at an all-time high. So we are seeing a very say different moves. So one has to now start taking a call on a stock specific basis on IT rather than as a sector. So specific stocks which I like at these prices, Tech Mahindra, which has made a big reversal, that looks promising. LTM, Mindtree, LTTS, this whole basket of LTI companies look interesting. And the second would be watching out for a bounce back in Wipro, which has corrected the most in the larger caps.
All right, let's move right on then and get you another ET Now exclusive, as sources say that SBI is likely to offload shares of Yes Bank. The lender, we understand, is likely to discuss their strategy on Yes Bank this week. My colleague Ankur Mishra has the details. Ankur?
Yes, sources say that State Bank of India is unlikely to take an exit route from Yes Bank after March 13 deadline. What we have gathered is that the lender aims to continue as majority shareholder in Yes Bank even after March 13. However, the shareholding of State Bank of India will come down around 2% or so, from 26.14% to 24% due to the deal which has happened between Yes Bank and Carlyle and Advent, and the warrant conversion will result in dilution of State Bank of India stake in Yes Bank. Apart from that, the lender is going to discuss the investment book strategy in a meeting which is set to be conducted this week. Not only State Bank of India, we also learned that other lenders are going to meet this week to decide on whether or not to exit Yes Bank. Remember, Reserve Bank of India had prepared a rescue plan in March 2020 for Yes Bank. As per asset reconstruction scheme, 75% of the shares were locked in, and that lock-in is opening on March 13. We also learned that State Bank of India is also going to discuss this strategy with the Reserve Bank of India, and after that a final decision will be taken. But sources say that the lender is unlikely to take complete exit route from Yes Bank.
Lots lined up today on the show, but let's focus in then on the stocks that are on the editor's radar. Today, we're discussing two names that are in the spotlight. One is a PSU bank, SBI, and then Nykaa. Let's begin then with Nykaa first up. We've got Macquarie's latest report. They've initiated coverage and they've got an underperform rating with a target price at 115. And Nikunj flagging off concerns, saying that there are still a lot of concerns when it comes to beauty as well as the fashion business.
This is one stock, when it went public, it in a sense was the toast of the town.
Oh my gosh, yes it was.
Whatever could go wrong, everything could go wrong for Nykaa.
Yeah.
The same folks are coming out and saying, okay, there are a lot of things which could go wrong for Nykaa. And the basic thing which could go wrong for Nykaa is competitive intensity. For any business, if the competitive intensity is increasing, that means margins could come under pressure, or companies will have to invest more. or there could be a price war, so to speak, and the market share is not going to grow as per what everyone thought initially. So competition, I think, is scaling up for Nykaa from the Tatas, from the Reliance, and that, I think, in a sense, is the real reason why Macquarie seems to be indicating that the best surely is behind us. We can't look at 86% drop because there's a bonus adjustment here. Please take this one out. But in general, I think this has been a haloed stock. It's a haloed stock which, in a sense, did not, it really got a lot of bad PR after that bonus issue adjustment. And now, in a sense, everyone is saying,
resignations,
yeah, so there are a lot of things which, in a sense, management will have to come out forefront and say that, okay, you're doing great, and how are you looking at rebuilding that entire lost mojo, so to speak. And that is, I think, the reason why it's on the radar of Macquarie, where they are not using the word resignation and the entire perception loss. They are talking about competition, which is going to intensify.
Okay, that's the Macquarie view on Nykaa. Let's move right on then and discuss SBI. They're too on the brokerage radar. Morgan Stanley actually has an overweight rating with a target price at 715, and they're talking about strong earnings visibility for SBI.
No, this is pretty much similar to what they said about Bank of India, and the Bank of India stock did rather well. The language is exactly the same, just the name has changed. We believe the stock price will rise relatively to the industry next 60 days. They said 30. We estimate there is 80% probability of the same scenario, which means what Morgan Stanley is saying that, hey, there is a trading bet which you could take in State Bank of India. When a firm like Morgan comes up with a tactical idea, it means that in the near term, either they are confident or they are of the view that flows will move back into State Bank of India. The stock is down 9% this year. It's got a lot of levers which are at play. But why are we bringing it up right now? Because it's a tactical idea from Morgan Stanley. Historically, we've seen 4 out of these 5 ideas have worked.
Yes, absolutely. So watch out for SBI as well in today's trading session. But let's hear it out then from Pankaj Pandey on his top bets and his top fundamental stock ideas.
From a sectoral perspective, I think we have started liking some of the PSUs, say for example NTPC or something like say ONGC. Besides that, I think our sense is that banking has been sort of struggling for some time. But given the fact that IT overall, since the US Fed is still hawkish, probably the kind of run up what we have seen in the 5-6 probably 1.5 months in IT probably might take a pause, and banks ideally should sort of do better from that perspective. And you've seen banks sort of doing well, especially on the unsecured side of the portfolio. Most of the banks have been sort of inching up that portfolio. So NIM expansion can still sort of pan out in the next quarter. And valuation look reasonable to us. So we like something like SGX Bank or Federal Bank. And then I think in some of the mid-caps, for example, Techno Electric is one company which missed out in terms of numbers, largely on the execution side. But our sense is that Q4 ideally should be a lot more better than what we have seen. We like some of the other names like Action Construction Equipment, largely from a overall capital goods perspective. And then within software, we like small cap companies like say Newgen Software, where the management is quite confident of delivering good double-digit growth over the next 2-3 years.
Sandeep, what's your view on Reliance? It's gaining traction. It underperformed for the first month or the first 2 months. Now looks like it's getting its mojo back.
Yeah, Reliance after a long period of consolidation is looking decent in terms of valuations and in terms of the business dynamics of the refining business. That also looks positive. Retail business, which all over the India across retailers are having a tough time at this stage, but I think that should see a revival. Telecom is doing fine. So I think overall, when this entire Adani issue came up, all the leveraged companies, etc., where people thought there could be leverage issues, got sold out, and Reliance was also became a part of it for no reason. So I think after almost a 2-year consolidation, now Reliance, I believe, is well placed. I think it should outperform the market this year and could give around 15% return to investors.
Okay, 15% from Reliance. Nuresh, it's been a yes and a no kind of a year for Reliance. Is it a yes? Is it a no? What is your view on Reliance?
So the case for Reliance is very simple in terms of a technical parlance, wherein you keep a stop loss and say if that works out, the risk reward is great. So if you look at the stock prices, it's gone nowhere for the last 2 years. The stock was the first one of the blocks in the rally, which started in 2020. It went up from 800,000 levels all the way to 2300. And post that, 2300 has become that pivot level where it becomes a support and a resistance all through. So at 2300 levels, the stock has a risk reward, wherein at 2300, 2400, if it plays out, it could go back to 2750, 2800 in the minimum case, which is the previous high of the last year. And if it breaks down below 2300, it again goes into the same sideways period as it has been, or maybe drift lower. So one can, at current prices, keep a stop loss of 2300 and play it out for 2750. The consolidation is done, but the momentum is yet to come back into the stock, but the risk reward is great at these prices.
Sandeep, a segment which we've discussed in the past, the liquor space, and for last 2 quarters, numbers have not been great either for Radico or for United Spirits, the companies which we track. United Breweries also, they have their own set of problems. Now that inflation is coming under check and summer is around the corner, is it time to go back into liquor stocks, especially United Breweries? It's into beer.
Yeah, so beers should do well, and that's typical of the summer demand. And if there's a hotter summer, then beer will do much better, and that's the reason why people are also bullish on AC, fans, and other beverage companies right now. I would think that for UB, the story could be strong. The only issue which most investors don't realize with liquor companies is that their pricing is highly regulated by the government. So it's not that if the raw material prices move up, they can just go in and increase prices. So each stage requires approval from government, which is long drawn. And to that extent, that impacts. And many of the governments have been very reluctant for some reason to give price hikes, especially for liquor companies. And that's what is impacting their margins. So for a liquor ex of beer, I think the story is still not so clear because demand was subdued and input prices remain elevated and could remain elevated for some more time given the dynamics of both the spirit supply from the sugar sector, where overall production estimates for sugarcane have been cut substantially, as well as grain availability and prices of grains.
Okay, Kunal, आप क्या ले रहे हो? We're talking about liquor stocks, not liquor. I disqualify that.
I'm a teetotaler in this. So I think from the liquor space, there's nothing which is attractive other than Radico. I think that's the only stock which has outperformed. United Breweries, United Spirits, these stocks have underperformed. Global Spirits, GM Breweries, even these stocks have not been able to lift off. So from 2020, it was actually Radico, GM Breweries, Global Spirits, etc., which had done exceptionally well for themselves. I think if I'm not wrong, there were stocks which were risen up by 4 to 5 times from their 2020 lows. But the likes of United Spirits has been a big underperformer. Even in this phase of correction, the stock is trying to make a comeback again about that 750 to 800 mark. But then the way the stock is struggling, I think just gives a sense that it's not yet settled into a breakout kind of a zone. So I think the only chart which looks very attractive, Radico Khaitan, the stock is trading above the 200 moving average. Even this last 1 month or 2 months of correction, the stock had been holding on to this long-term averages. So that's one of the class outperformers from the entire beverage pack.
Okay, let's move right on then and get in a view, Sandeep, from you on Mahanagar Gas. Given the fact that the company is in focus largely on that acquisition, 531 crore rupees, do you believe it is going to be an incremental positive? And if you don't track this one specifically within the entire space, is there anything that stands out?
Yeah, gas companies I haven't been looking at lately, but just as a comment, I believe that the fall in gas prices, especially globally, LNG supplies, etc., so all that supply increases as well as fall in prices should incrementally be positive for these companies. But on a stock specific basis, I don't have any view.
Getting a take then on some of the movers that we saw on Friday's trading session within the broader markets. We did see pretty much neck-to-neck performance for the mid and the small caps as the index scaled solid 200 points on Friday's trading day. Apart from the Adani Group stocks, Naresh, it was PSU banks that really dominated that list. Union, UCO, Indian Bank, Bank of Maharashtra. Is this sort of a long-term strategy that you believe that, or a long-term... Oops, I think we snapped that link with Naresh. But Kunal, let's get in your take on those PSU banks.
Yeah, I think it's a good structural comeback for PSU banking stocks. So now when there are two ways to look at it. From the, I think July-August lows 2022 lows where the stocks rallied up 2x or 100% approximately from their July lows to a point where these stocks, after an overstretched rally, these stocks went to a correction. And if you look at just the last 2 or 3 months of price performance, many of these mid-cap, small-cap PSU banks, these stocks have corrected by more than 30 to 40%. So in either of the extent, the stocks have completed a phase of strong rally, a correction, and the correction has made the stocks come back into an oversold territory. The likes of UCO Bank, for example, Bank of India, these stocks have been beaten down significantly. So I believe that there is a strong wave of rally which is going to come back into the PSU banking stocks, and that's one sector which I would be bullish on even from current levels.
All right, that's the view coming in on the PSU banking lot, but there's also Pidilite that's in the spotlight. That's largely on the back of their management meet. What have been some of the key takeaways? Let's find out from Vinny, who's joining in with that perspective. Morning, Vinny.
Good morning. And when we talk about what is coming in from the management meet, one, they said that their core business will continue to do well going forward. And in terms of other than that, they've highlighted that the margins, which have been under pressure because of the raw material price inflation, that will actually see an improvement in the coming quarters. Other than that, they continue to say that, rural growth is actually a factor that has seen a slower growth that has continued even as of now. But overall, on a CAGR basis, when you look at it, they are at reasonable levels. Do not forget that rural growth had actually outperformed and had done better and supported and took the heavy lifting during COVID period for Pidilite. So now that base was also there, plus a bit of a slower growth is what they are factoring as of now. Now, do not forget the company also highlights that they've already become the second largest players in the tile and stone solution market, and Sealants is aiming the Sealants brand for the company is aiming to see a growth as well, and that will be something that they are starting to aim further on and focus on as well. Now, other than that, currently when you look at it, 15% of the business comes in from the Genie dealer app, while the sales from e-commerce has seen a 14 times growth in the last 3 years as well. So strong growth in the e-commerce business. Lastly, sharp scale up in distribution is what they are focusing on, partnered especially with HUL to sell the products in rural Bihar as well. So keep an eye out on Pidilite on the back of this management commentary.
I'm just going to, thanks Vinny for that. SGX is looking 85 points stronger. Kunal, we are looking at a recovery coming from 7,300. 17,300, beg your pardon. It's not COVID number, 17,300.
For a second, like 7,000.
Yeah, just 2 years ago, we had the same
I know,
sell-off.
exactly.
Yeah, we'll talk about it.
Can
But
imagine that.
can we assume that this time around, the range or the upper end of the range will get retested, which is 18,000, 18,200, 18,300. Do you think there is enough and more ammunition in this time's rally?
Yeah, I think there is some ammunition left for the markets to move up higher. Now, the only question is that how strong can we expect a follow-through up move? Like, for example, on Friday, we saw a very strong 200 plus pointer up move on the Nifty. Now, of course, we may not expect a similar kind of an up move, but then, how the traders take out this kind of a gap of opening today after a 200 point plus uptick on the index. If there's a 100 point uptick, whether the traders who have been carrying on long positions, whether they are happy holding on to the long positions selectively, or they manage to add on to the positions, or if there is squaring off or unwinding of positions or booking out profits. If there is booking out of profits, which means it indicates that the pace of rally would slow down significantly. So the only way in which we would probably assess is how strong the traders would probably want to open up positions into the index futures, because as of now it just seems like there has been mild short covering which has happened onto the Nifty, very mild addition on the open interest for the bank Nifty, and that could probably play a bit of a juggle for the markets, because if you don't have too much of a strong short covering across both the indices, then the propensity for the markets to move up higher slows down significantly. So I would be of the belief that it all depends on how the markets open up the first half an hour, first 1 hour. But if there is unwinding of positions as well as squaring off of positions, then we may probably not retest the previous tops of 18,000, 18,100, but the rally may fizzle out maybe 100, 200 points lower than that.
Sandeep, what will it take to scare the bears?
So bears will be scared if the markets move up. So that's very simple. As bulls get scared when the markets fall down. So I think bears will be scared earlier than people expect.
But Kunal, for the bulls to fire all cylinders, which stocks will have to do the trick?
So again, the traditional large cap names like Reliance. See, so even stocks like L&T, which was doing exceptionally well since last 2 months, that stock has also fizzled out post budget. So you don't have too many large cap names which are participating. In fact, I was looking at the charts for these private sector banking names as well. So I think other than ICICI Bank, most of the stocks are still struggling to hold above the respective 50-day moving averages. So that itself is a point of concern for the large cap private sector banking names. Reliance has been an underperformer as such, if I can put it. There is a lot of expectations that the stock may hold on to that 2250 mark. It tries to retest those support levels, bounces off every time. But then, just holding on to a support level may not be a strong enough reason to try and, bank on the stock. We would expect the stock to break out pretty soon. So, wherever that breakout happens is where we may expect more confidence to brew in. So, as of now, the confidence is more towards the tier to large cap names, the mid caps, and that's where you've seen the outperformance coming by. But the large caps are still an underperformer. So the only point of concern for the markets right now is that the large caps are still not finding their mojo back. And when you are expecting the markets to retest or resume the rally after 3 months of straight correction, you would want the large caps to fire up.
Okay. Well, 9:20 today is when you're going to hear out the big interview, the mega exclusive with Rajiv Jain as to what got him interested in the Adani group of names. And he's looking, of course, as betting on Adani group of names as a multi-year investment. He's not looking at the short term, but yes, he found value. You'll hear an excerpt of that exclusive interaction coming up at 9:20 that he had with Nikunj just yesterday. And he's saying that he expects Adani Green to actually grow the fastest. Sandeep, quite a bit of battering and bruising when it comes to the Adani names. Are you finding any merit in investing at all?
No, I don't even look at the group to invest in actually. So I'm looking at it more from market stability point of view.
Sure, yeah, definitely. An indicator of market stability for sure, yes. But Naresh, any trading bets you think are really lucrative when it comes to the Adani group of names?
So it's a tough one right now because most of them have bounced back, and say the smaller names, even if you want to participate, they'll be on circuits. So you cannot participate. So the only ones you can participate is Ambuja Cements. Adani Ports has already made a strong recovery. It's almost back to the prices, not very far away from the prices where it was before this whole fall started. So the stock was at 750 to 800 before this. The stock has already reached 660 to 700 zone. So not much there on the table, but Ambuja Cements is one which can still have some upsides. So out here it would be a risky trade. Would keep a strict stop loss at 380. Expect a bounce towards 430.
All right, some interesting names that have had a fairly decent 1 month rally. You've got an ABB that's managed to shoot up quite smartly as it's rallied about 20% or so. Varun Beverages is another name that stands out and continues to remain a favorite. And then there's PB Fintech. Kunal flagged that off as well on the charts as a stock that he would look out for, and he believes it's an interesting buy recommendation. You've also had a pullback coming in to a Paytm, so that stock has managed to gain traction, currently quoting at around the 628 levels, and an Indus Stars as well has seen a double-digit gain. Let's understand your view then, Naresh, on the charts of some of these names, maybe an ABB or a Varun Beverages. Do you also have conviction in a PB Fintech?
So ABB is one which has continued to trend well, but it's been a slow and steady stock. So it's a stock which you would like to buy on dips, not in momentum as much. PB Fintech is the one which is more interesting because if you look at the stock has made a good enough base and has started making a classical move wherein after making almost a double bottom around that 400 mark, it has started making higher tops and higher bottoms. So clearly the momentum is set in this case. So out here, I would expect a slow and steady move towards 700 to 750 levels. So even at current levels, PB Fintech looks interesting with a stop loss below 560.
Sandeep, I want to go back to Axis Bank, and the Citi acquisition, Citi credit card business acquisition is over. However, they also said that we are paying less because of the total truncated value of the franchise. What does that mean for Axis Bank? Because in the near term, the acquisition has gone through, they don't have to raise capital.
Yeah, they don't need to raise capital, and I think the customer sort of attrition has been in line with expectations. So I don't think it's a negative. I think some of the analysts got concerned because they'll need to do some goodwill write-off, etc., which is in any case non-cash, so it doesn't matter so much. So, and on valuations, it's the cheapest large cap bank with similar dynamics to most of the other banks now after a period of difficult time. So I would think that I would be positive on Axis. I would think that from percentage gain perspective, if we combine ICICI, HDFC Bank, Kotak Bank, some of the other, all the larger private sector banks, in terms of pure return potential, it offers the best return potential.
All right, that's the view coming in. In the meantime, just a quick check-in on this pre-open rates this morning, and you've got a 17,700 print for now. So that's a move with quite a bit of conviction on the upside, and the Sensex holding out in the green around the 60,000 mark, but these are just the pre-open rates. We are certainly following that rally that we witnessed on Wall Street, but let's find out what mid-cap strategies our chartists are betting on this morning. And Kunal, what's looking good?
So it's Ujjivan Financial, which looks very attractive. In fact, 3 months of correction for the stock from 320 levels. The stock had corrected to 270 or below. It's now making a good comeback for itself, trading above the 50-day moving average. And it's been a very consistent kind of a chart. So even from the 2022 lows, when the stock was at 100 rupees, from there the stock has done exceptionally well. So I think after a pause, the stock is now restarting a journey on the upside. Would suggest a buy 300 as an immediate target. Stop loss at 266.
All right, Naresh, let's get in your recommendation from the mid caps.
So that would be a buy on L&T Finance Holdings with a stop loss at 88 and a target price of 105. We are starting to see a lot of say relative outperformance in NBFCs. So if you look at L&T Finance Holdings, it has started making higher bottoms. It just needs to start making a higher top above that 95-96 mark, which has been tested for the last 1.5 years. So expecting this to break out, a huge cup and handle in the making. So preempting that breakout, and the last 3 days it has seen a good bounce. So expecting this to eventually break out over 95, go towards 105 to 110 levels.
Okay, let's tell you what else is making news this Monday morning. And world's second largest economy sets an economic growth target of around 5% for 2023 after a year of tepid growth because of stringent pandemic measures. China's inflation is pegged at 3% and a 5.5% unemployment rate, with the creation of as many as 12 million jobs that they are pegging at this year. Also, a blockbuster listing expected for the SoftBank-owned chip designer ARM on the US bourses later this year. The company is likely to raise as much as $8 billion. Yawning valuations are pitched for the chip designer, ranging from anywhere between $30 to $70 billion. Also, India's budget carrier Interglobe Aviation is in talks with plane maker Boeing and a current supplier Airbus for a major aircraft order of 500 plus jets. Agency reports suggest that the airline is studying wide-body as well as narrow-body jets from both manufacturers. The said order will set a new industry record in place just weeks after domestic rival Air India's mega order. And ride-hailing aggregators Uber and Ola may move to the courts along with their bike taxi drivers with the view to get a stay on the Delhi government's recent order banning their services.
Moving on, after days of absence from court hearings in the Toksh Khanna case, the former Pakistani Prime Minister Imran Khan dodged an arrest after authorities arrived at his residence in Lahore. Thrice he's avoided indictment hearings in Islamabad Sessions Court. Moving on, the former president of the US, Donald Trump, said he will remain in the 2024 presidential race despite criminal charges in the ongoing investigation of the 2020 election tampering. Trump has made a pledge in response to former Fox News reporter in the annual Conservation Political Action Conference at Washington. Meantime, back home, the BMC is all set to implement an air pollution mitigation plan in Mumbai. With the air quality worsening at alarming levels, the civic body is now initiating multi-level monitoring strategy for the city. The four major causes that continue to concern authorities are road and construction, dust, traffic congestion, as well as industries and the power sector, along with waste burning. And it looks like Holi is getting a Make in India boost. In India, the pitchkaris are made, giving Chinese products a clear run for their money. In fact, there is an expectation of around 25,000 crore rupees of sales that could be coming in just from Holi products, which would be a 25% rise from last year. We've got herbal colors, balloons, water guns and other products which are also seeing very good demand this Holi.
Rupee at its highest level since 3rd of Feb versus dollar, that takes it to 81.8. So the natural strength in the rupee is something which we need to establish. It had almost become sub 83, right Kunal? Sub 83 for rupee?
Yeah.
All-time low was sub 83.
Sub 83.
So from 83.2, 83.1, it's gone back to 81.6.
Correct.
And if you're a foreign investor right now, if you are not investing in India, folks, you're also missing on the natural path what the currency seems to be taking. The dollar index, despite the fact that interest rates are, US job data was strong, US unemployment data is weak, the dollar index is still below 105. So rupee, I think, is natural strength in the rupee, which seems to be strengthening. And of course, that 15,000 crore coming in from Rajiv Jain and his fund also would have added to the supply in the near term. 81.86, that's the rupee for you. Where are Adani group of stocks? And is there a trade in Adani group of stocks yet? Ambuja, Adani Ports, Adani Green, Adani Total, some of those stocks are still looking strong. Ambuja Cement, I think, is the one where I think there is a change in terms of debt also. Adani Enterprise is nearing 2,000. It's almost gone above the pre-budget levels. Adani Power, circuit down couple of days, now circuit up maybe for next couple of days. Adani Transmission, circuit up. So these stocks in a sense are now moving from circuit to circuit. And that's Adani Total, which is the one where Total decided to go easy on their future investment plans. Whereas Adani Total, we'll see that one as well. We've discussed Adani group of stocks, but I want to go back to the lenders once again. Nuresh, which is the strongest PSU bank in your book?
So it would be SBI first, and then it would be Canara Bank. Both these names are looking pretty interesting. So SBI has made a good base now at 500 to 550 levels, and could be starting up the next leg. Canara Bank, which did a really good move, has now started making a base around 260 to 280. So overall, a good correction in both these names and across the whole PSU bank basket. But I would still go with the larger names.
All right. Let's get a move on and find out what the index calls are then from our chartists, given that we're circling around the 17,600 mark. It's a whole recommendation from both Nuresh and Kunal. In fact, Santosh has got a buy call on the index this morning, and the consensus is a whole rating on the Nifty, given the fact that we did manage to scale up quite comfortably on Friday's trading session. All right, what's the view on the Nifty Bank? No consensus call, book profits. That's the view coming in from Kunal. Hold according to Nuresh, and buy, says Santosh Meena.
looking at some of the other stocks which are going to be in focus this morning, and of course it's the Adani group of names. ICRA, by the way, has revised its rating outlook on Adani Total as well as Adani Ports to negative from the earlier stable. But it seems like it's going to be a stable start for us. 86 points higher, about a 0.5% uptick, is not something that's going to give you any reason to complain. Motherson Sumi, their arm has acquired an additional 1.5% stake in SMR Jersey for a price consideration of nearly about 18.5 million pounds or euros, I beg your pardon. So that's another stock which is in focus. There's Bajaj Electricals as well. They've won a 565 crore rupee order from South Bihar Power Distribution. So that's another stock which is going to be in focus as well. There's of course HAL. They've bagged an IT refund of about almost 700 crore rupees. Then there is Power Grid as well, which has won the bid for 2 projects in the state of Chhattisgarh. So these are a couple of stocks which are going to be in focus, and most of them already in the pre-open rates itself are showing you a fair amount of traction. But Kunal, we were just chatting about contra plays in the market. So for instance, the entire infrastructure theme, your most of the Adani group names, your power names like an NTPC, etc. L&T, of course, is something that you've talked about earlier as well. Any of these names that you think are good medium-term bets?
So I think other than L&T, there's nothing which is looking very, very attractive because Power Grid, NTPC, these are typically stocks which tend to do at the fag end of a market rally. Now, right now, the markets itself are into a struggling mode. Now, you look at Power Grid, the charts for Power Grid, you look at NTPC, the stocks, the price charts for itself. There's nothing which is attractive to the stock price. For example, Power Grid is just, I think, 5% plus or minus the 200 moving average for the last 4 or 5 months. Now, you can call it as an outperformance or more of a resilience for the stock compared to the Nifty 50. But then, in terms of price trends, there is hardly any major trend which is kicking up for Power Grid. Even the likes for NTPC, the stock has been struggling at this 175, 180 mark for quite some time. I think start of 2022 is where the stock had hit those levels of 180 plus, and from there on the stock has now taken almost a year to try and come back to that 175, 180 mark. So that itself tells you that the kind of struggle the stock has shown even in the phase when the markets were at first looking strong and then now got into a volatile phase. So I would not be too much bullish on the set of the stocks over here. But I think the only name which looks like an outperformer or has made a strong comeback, not from the power space as such, but the likes of GAIL and ONGC, these are the only 2 stocks which have shown a change of behavior for themselves. GAIL rising up very sharply from the 90 levels to 100 plus. ONGC's come back about that, above its long-term averages as well as the medium-term averages above 150 plus mark. So these are the only 2 charts which look attractive.
All right, there you have it. That's the view coming in on some of those power stocks. Kunal, let's also get in a quick take then as to how you've read into the movement that we've seen in some of these auto names. They've been in the spotlight on the back of the auto sales numbers. What's your best bet?
So I would still continue to be bullish on Tata Motors from a more broader perspective. Yes, the stock is still not being able to find its breakout above the 450 mark. But then I think, it's also not being able to break significantly below the 400 levels. So I would probably expect the stock to remain in the range. And in case if the stock dips, say, closer to 410, 420 levels, that's a good zone to go contra. We've seen this happening for Tata Motors multiple times. M&M surprisingly has been an underperformer. So I think at 1260, 70, where the stock closed on Friday, it's now posing a good risk reward to go into a long position. But the likes of Bajaj Auto, Maruti, these stocks are struggling, and these stocks have broken below their major key swing support. So there could be a selling pressure which could probably happen to these names. So as of now, I'll stick with Tata Motors and possibly M&M.
You have Tata Motors long in futures and cash both, right?
Cash more.
Okay. 50 seconds to go. It's a truncated week, but between Thursday and Friday, if anything has changed, well, it's a sentiment which has surely changed for a market which was searching to find its lower end of the range. I guess now there would be an attempt for, at least there would be a serious attempt for markets to go higher today and maybe hopefully for this entire week. There's a degree of confidence which comes back when you see a large investor coming out and endorsing Indian infrastructure stock. It's not about what he's done to Adani, but the fact that you're coming and investing in infrastructure stocks where historically foreign institutional investors have shied away. Last week, India did okay, But what is also important is that on Friday, Wall Street, despite inflation concerns, actually made a comeback. First rates, any seconds now. Just refer to my screen for the first updation. And there you go, just bear with me. First rates, Monday morning after a 2-day holiday, well, the mood clearly is upbeat. 90 points higher for the Nifty, 273 points up for the Sensex, 0.5% higher for the Bank Nifty. All benchmark indices, they are off to a good start now. Yes Bank, well, SBI may not be looking at selling their stake immediately, but the stock's fallen because of the fear of supply. It's at 16.5. In terms of volume, you've got Nalco, where the volumes are at 1.4 million shares first thing this Monday morning. GAIL, Suzlon Energy, that's all moving higher. Pointless to say that where Adani group of stocks are, because they would be racing higher. Adani Green, Adani Enterprises, Adani Port, Ambuja, all of them will be racing higher. There is a spring in the stride for some of the fintech stocks because Zomato is up 2%. There is an uptick which is now there in Paytm. There is uptick which is now there even in Policy Bazaar. Where is Nykaa? I think there's a report in Nykaa from Macquarie which talks about increasing competition and intensified competition could have impact on the underlying business per se of Nykaa. And for a haloed stock now, it's coming under pressure. 146 rupees. Nothing in terms of a large block deal, if I can say so, but it's the Adani group of stocks where the party continues. Aisha.
Yeah, absolutely. They are the ones which are riding high and they continue to do so. So pick up any stock, be it Adani Enterprises, Ports, Ambuja, they're all holding up very, very smartly. Vedanta as well, after the management clarifying all the news around and surrounding that particular company, Vedanta as well held out on Friday, and today as well it's seeing about 1.25% kind of gain right now on the screens. Couple of other stocks which are in focus, and we just told you about Power Grid, which is one bid for 2 projects in the state of Chhattisgarh. Look out for that. HAL, which has got an IT refund of about 700 odd crore rupees. So that as well is another stock which is in focus. We highlighted earlier today that MGL has acquired Unison Enviro for 531 crore rupees in cash. MGL gaps up about almost 3% in trade as we speak right now. And then Bajaj Electricals as well, which has got a sizable 565 crore rupees order. That also is another stock in focus. Gaps up about almost 3.5%, more than that actually right now in trade as we speak. There's IEX as well, and the February total volumes have come in lower, 7% on a month-on-month basis and 6% on a year-on-year basis. That as well is down about 0.5% as we speak. But besides that, it's a pretty okay market, Kunal.
I think so. Okay market. Bank Nifty is opened up with 260 points up, so 41,500 on the spot levels. Nifty is back again at that 17,750 mark. So I think from a short-term intraday perspective, the trade which I'm taking right now is to try and book out profits on the Bank Nifty, the ones which we initiated specifically on Friday morning. So I think it's a good time, 1,000 plus points on the Bank Nifty, and I think from a short-term trader, the index would now come back into a slight overbought territory. So now trying to probably shuffle from the Bank Nifty to some other sectors.
Right. Okay. Naresh, what about the first trades that you're executing and punching in right now? Naresh, I think your mic's mute.
Yeah. Buying on Tata Power, the stock seems to be on verge of a breakout about the 210-12 mark. Once that happens, it could be a quick move. So preempting a buy over there.
Okay, and as promised, it's the mega